Hi, it's Sharon from Sharon Q Realty, and I'm here today to talk about our home prices headed toward bubble territory. Well, talk of a housing bubble is beginning to crop up as home prices have appreciated at a rapid pace this year. And this is understandable, of course, since the appreciation of residential real estate is well above historical annual averages. So, according to the Federal Housing Finance Agency, annual appreciation since 1991 has averaged 3.8%. Here's the latest 2020 appreciation numbers from three reliable sources: FHFA 7.8%, CoreLogic 7.3%, and Case-Shiller 7%. So it's easy to jump to conclusion that house appreciation is out of control in today's market. However, we need to put these numbers into context first. So first, there's inflation and the comeback from the housing crash. Following the housing crash, home values depreciated dramatically from 2007 to 2011, and values are still recovering from that unusually long period of falling prices. But we must also realize that normal inflation has had an impact. So Bill McBride, the founder of the well-respected Calculated Risk blog, recently summed it up this way. He said that it has been over 14 years since the bubble peak. And in the Case-Shiller release today, the seasonally adjusted national index was reported as being 22.2% above the previous bubble peak. However, in real estate terms, adjusted for inflation, the national index is still about 2% below the bubble peak. So as an example, if a house price was $200,000 back in January of 2000, the price would be close to $291,000 today, adjusted for inflation. Now, the COVID impact on the home prices. The pandemic caused many households to reconsider whether their current home still fulfills their lifestyle. And many homeowners now want larger yards that are both separate and private. And their needs on the inside of the home have changed too. People now want home offices, they want gyms and living rooms well suited for video conferencing. And while homeowners continue to want their outdoor spaces that offer a safe retreat, that appeal has shifted into other parts of the home. So coupling comfort with function, in other words, homeowners want amenities for work and leisure, and they plan to enjoy them long after the pandemic is over. So at the same time, concerns about the pandemic have caused many homeowners not to put their plans to sell on hold. Realtor.com just released their November monthly housing market trends report, and it explains that nationally, the inventory of homes for sale decreased 39.2% over the past year in November. That amounted to over 490,000 fewer homes for sale compared to November of last year. Wow, those numbers are crazy. And more people are buying and fewer people selling has caused home prices to escalate. However, with a vaccine on the horizon, more homeowners will be putting their houses on the market. And this will better balance supply with demand and slow down the rapid appreciation. So that's why major organizations in the housing industry are calling for much more moderate appreciation next year. So here's a more recent forecast for 2021. The National Association of Realtors is saying appreciation is going to be somewhere around 4.5%, Freddie Mac 2.6%, Fannie Mae 2.1%, and the Mortgage Bankers Association 2%. This is nothing like 2006. Finally, let's put to rest some of the concerns that today's scenario is anything like that which led up to the last housing crash. Such a frenzy of activity, reminiscent of 2006, raises questions about a bubble and a potential for a painful crash. And the answer is there's no comparison. Back in 2006, dubious adjustable rate mortgages taxed many buyers' budgets. Some loans didn't even require income documentation. Today, buyers are taking out 30-year fixed-rate mortgages. 14 years ago, there were 3.8 million homes listed for sale, and home builders were putting up about 2 million new units. Now, inventory is at about 1.5 million homes, and home builders are underproducing relative to historical averages. So the bottom line is most aspects of life have been anything but normal in 2020, and that includes buying and selling real estate. High demand, coupled with restricted supply, has caused home prices to appreciate above historic levels. So, with the end of the health crisis in sight, we'll see price appreciation return to more normal levels next year. So, for any of your real estate needs, please feel free to contact us at 585 900 1111, or you can always find us on our website, sharonq.com.